Hey everybody, hope you're doing well. Hope you had a great week of trading. Today we're going to cover the QQQ or the NASDAQ 100 for the week of August 16th, 2021. Let's just jump into it. First things first, let's talk about our scoreboard. So over the last, I don't know, since March of 2021, we started to actually keep score of this. We're 21 for 21 in terms of getting what would occur for these companies during the earnings announcement. So we all post this ahead of time at prep2grow.com/QQQ. You can check it out there, or you can follow it on our Twitter when we post it out immediately following this video. But last week projected Cisco. They tanked in their Q4, bad expectations. We saw them pull back at an unprecedented level, and it showed. They pulled back. They specifically missed their earnings per share. They were down 5% after market, after they did the announcement. We also there's a high there was a high which moved to a lower probability as they started to pull back on their corporate growth of an acquisition. That came true. They did make an acquisition as well as part of their earnings announcement. So generally, algorithms were very spot on with Cisco. Missed earnings, gave poor future guidance, and made an acquisition. So all around, the algorithms did what they were supposed to. Again, Prep2Grow doesn't trade on earnings. It's too volatile. A company could do exceptionally well and then have a pullback because of the simplest statements. Most recently, BNY Mellon had a great quarter and then pull back within that day or within the next 2 trading days. They've fully recovered and are actually beyond it, but you just can't play short earnings because it's exceptionally risky. And we don't do it. So we always try to minimize our risk in going into trades. And so that's why we don't recommend trades going into earnings. We do provide them to active traders that are interested in it. You have your own strategy and hopefully it's highly successful. But for us, it's too much risk for us. Let's take a look at the week. We predicted a bull. It was up very little for the week, 0.2%. So it's up 17.5% for the year. We did predict last week or project that it was going to transition from a bull to a flat. And that happened maybe a little bit sooner than expected. Anything below 0.5% gain or negative 0.5% gain, we really see as flat. So while it was up, we consider a bull, it was flat. So flat week and heading into flat. So forecast wise, we actually had a 15% drop in our forecast down to 39%. And that's mostly because the cumulative whole of the companies that make up the QQQ, mostly the NASDAQ 100, some of them are showing signs of fatigue and slowing down, and that's why we've readjusted, or the algorithms have readjusted their earnings. On the analyst forecast side, they're up 4% week over week in terms of their forecast, which is probably where they should start to get to. Although if you look at the chart on the right at the last week, at the top, Prep2Grow forecasted growth, you'll see that analysts are upping theirs while ours are downing because there was a drop in the week in terms of corporate growth, and we'll talk about that when we get into our projections. First, some housekeeping. Prep2Grow is doing a seed round. I would love for you to participate in our investment into our funding and become a part owner of Prep2Grow and become an investor in it. If you're interested in it, please head to wefunder.com/prep2grow and you can sign up there. If you have questions, as always, you could hit us up at contact@prep2grow.com, and it's also will be in details of this video. So what is the next week looking like? While there is some exciting earnings announcements, and we'll talk about that in a second. It is going to be a flat week. We're heading into this, and next week will be more of a 2-week flat growth. So not a lot of things happening over the next 2 weeks. Reason? Well, the FANGs are growing very well. The Qs are pulling back, or the non-FANGs, the non-Amazons, the non-Apples, the non-Netflix of the world are pulling back. So it's going to balance things out for a bit. Another one is job growth. Job growth is looking good. Concerns are semiconductor pullback. We've seen signals that there's a semiconductor pullback that's gone on over the last couple weeks. While it could be seasonal, it's too consistent across too many companies for it just to be potentially a um, random act, right? Usually it's one company or two companies at a time. We're seeing, about a dozen that are looking like they've done a bit of a slowdown, a bit of a pullback. But this week, Applied Materials is announcing, and so they're the drivers of the economy mostly when it comes to semiconductors and technology. So what they say is essentially what will happen. Other things, inflation rate. If you've seen it, inflation rate is huge right now. It's just not car rentals and houses. I think a lot of economists have talked about, oh, well, it's not inflation as large. It's just car rentals skewing the numbers. That's not correct. Inflation rate is high, and it's increasing, and prices are going up for normal goods, milk, bread, etc. We track that quite consistently, and we have our own kind of bread basket, which we analyze to determine what inflation rate looks like, and it's going up very significantly, and that's a concern. The other is macro conditions. Things are ending in terms of the stimulus and the growth and the protections around that. So we'll see what the true economy is going to look like. Also, housing outside of the U.S. had its first pullback in quite a number of years. So, will that bleed into the U.S.? Maybe, but certainly there is some signs that the housing market is hopefully leveling off. And if it's a pullback, then that's obviously a macro condition concern. So a lot of interesting things happening over the next couple of weeks. So we'll monitor and let everybody know how it's progressing. So why are we predicting flat? Well, we came out of a very small bull. As you can see, for what is August 8th down below, that's more of a 30-day projection out. So this is what occurred in September. We start to see more just bulls and bears running in parallel, which is a signal of flat. So we'll watch that and see if there's a change of directions. But right now, really signaling that the next 2 weeks are going to be flat. Let's get into the announcement. And there's some really, really interesting ones this week. NVIDIA being the big dog in the block, Applied Materials being the one that really matters. Analog Devices is one that matters well because of defense spending and that kind of stuff. Synopsys and Ross, we're not even going to talk about because they don't really matter. So we'll cover Applied Materials in detail. We'll cover Analog Devices and NVIDIA right now. And then we'll talk about the unusual activity when we jump into Applied Materials. So Analog Devices, they're announcing their Q3. We've been tracking them since 2013. They've been slowing growth since Q2. With a high stock price and lower growth, this fits prep to growth sweet spot of stock pullback. So while we think that they will have a decent quarter, that their future guidance is going to miss. So Analog Devices, puts and calls is what we're seeing with them. NVIDIA is announcing their Q2 on August 18th. We've been tracking them also since 2012. They've ended their last quarter at an all-time high. So this was Q1. However, they've been dropping since the beginning of this quarter, which is a concern. So either the outcomes are giving a probability that they're now normalizing all the acquisitions, reconciling staffing levels they have, and so they're slowing the growth a little bit around hiring and some of the corporate growth side of it. Also, we're projecting a high probability of another acquisition, and plus some seasonality. So with that, while we think NVIDIA will have a great quarter and smash it, there's concerns about future guidance. Also, if they're making an acquisition, like there's a high probability it's going to occur, almost 100% of the time NVIDIA has made an acquisition announcements, their stock has pulled back. So use caution in that. So now let's jump into the meat of Applied Materials and our usual activity. So this is Prep to Grow. So this is our portfolio, what we've created for folks. So they come in, we create an AI, or an algorithms create a portfolio for them based on their risk thresholds. This is mine. It's been going since May. It's in beta. That's why the date's a little bit off. But, I have a total of 20% gain over the last, what was May when I started this beta beforehand. So over the last 3 months, 27% return. I'm averaging 18% return in 19 days. And so this is our future growth of our projection. So, expected to hit 10K in October in terms of a growth, and just continue growth. This is what it looks like. If you want to buy one, you have two methods. You can link your trading account and this will buy on your platform of choice. And so if I hit buy call, it actually buy on my Ameritrade account. The other is you can set up algo trading with us. And so based on your preferences and your decisions, you can turn on algo trading and this will automatically trade for you based upon market conditions and what's happening. And the new thing we just introduced actually is I can replace a trade. So I haven't been here in a couple days. Well, that's not true. I'm always in it, but I left one just for this, our QQQ weekly discussion. And I can replace it now. So it's been 7 days since I've had it in there. And then I'll get a brand new one to buy. So it'll probably be down the list someplace. I think it was Citrix. Okay, sorry, Lockheed Martin. So Lockheed Martin got replaced with Lockheed Martin. What we're allowing folks to do now is if you have 10 recommendations and you didn't like one or you didn't get back to it in time to do a buy, we'll allow you to place it and you just click that replace button. I'll give you a brand new one. So, but let's just jump into the recommendations. So Applied Materials, let's jump into them. This is our latest recommendation from them about 2 weeks ago. We did have one coming out tomorrow, which is also very positive, but this one had the most unusual option activity. So we're projecting it's going to go up 8%. If you don't know who Applied Materials is, they are the backbone of the technology world, them and Lam and a few others. But they build the chip manufacturing equipment. So if they have a good quarter, it means that the whole economy is going to have a good quarter. If they announce a bad quarter or a pullback in future guidance, that really means historically that there's a pullback to recession on the horizon. So they're critically important to watch. They're announcing their Q3. We've been tracking them since 2011. They're based in Silicon Valley, of course. So they're the backbone of it. Specifically Santa Clara, California. I've known some folks that have worked there. It's a very good company, very well run, very old school semi culture. Not a Facebook or Google where they get free lunches, but a very small margin semiconductor capital equipment company. Since the beginning of their fiscal year, analyst expectations have increased 1.5% for them, so 150% growth they're expecting from them. They've almost lived up to it. They're about 118% growth in stock since the beginning of their fiscal years. Our forecast is at 1.85 times since the beginning of the fiscal year, 185% growth. And they are at an all-time high and no signs of slowing and crushing it. So we expect future guidance to be very good for them with a solid announcement, and they actually fit surprisingly our sweet spot with this growth of high growth and stock growth that hasn't reached its potential yet. So our algorithms are actually expecting a 10% bump in their stock price within the next 6 months. So expect good things from Applied Materials. Their 200-day average, again, they're pretty high. They're currently at 129, and they bounced around a little bit. They're down 124, pre-market. Or 129. 129. But we're again expecting that they're going to crush their quarters. So let's talk about the unusual option activity. There's two of them. MasterCard is in the mix again with a 36 volume to open interest rate. Unusual option activity is really measured as anything greater than more volume than open interest. Open interest is our buy, sells, people following, that kind of stuff. So MasterCard, a lot of unusual option volume on them for a while now. It is for a call. They're not announcing till October. We have a very good success rate with MasterCard, 96% of a 15% return in 5 days. So that's very good for us. This is not recommended just because it doesn't have what our growth should be. 11% for an option growth is just too small for us. If we look at the more details around it, this is October 19th, 2021 option date at a 365 strike price. Again, their option activity is skewed quite heavily, volume and open interest. And it's not too cheap. It's about $2,000 per contract. So this MasterCard, we fully agree with this. The algorithms have great success with it. We're looking at the forward projections. They're growing. There's no sign of slowdown. But again, not a huge growth, so use caution there. The next one is a lot communications. Good at predicting them. These guys are usually a bit of a slower return. We didn't recommend them because it doesn't meet our 95% standard. So if one of a 5-day or a 30-day 15% return hits 95%, then it becomes something that fits our strategy. But they have a high growth potential. They're not announcing until November. This is for a call. They have an 18.72 volume to open interest rate. This is for the soon September 17th, 2021 expiration date at the 750 strike price. So we wouldn't actually recommend this for two reasons. Not because a lot's not doing well. They're actually looking very well. We support the unusual volume on call for this in general. Challenge is that the time to return is not going to fit within the September 17th timeframe. We've seen that any kind of decent return takes on average 18 days. So if you buy it now, time decay may hit you in worst case 36 days for it to really get the tail of returns coming in. So use extreme caution with them. Although we do predict a good gain, a good stock growth for this. We would say if you're going to buy this, buy a stock, not options, because of the time horizon is going to be difficult to make a return. All right, let's jump into the rest of the week. Again, just to finish off, Applied Materials, going to crush it. NVIDIA, some odd things happening in the latest quarter. Maybe some seasonal slowdown. Maybe the algorithms are predicting probably an acquisition, probably just seasonal, but still doing very well. Analog devices challenged, looking at a potential forward guidance low. Analog devices is heavy into the military, and so maybe expecting some pullbacks as part of that. Synopsys and Ross, nobody cares about them. Definitely nobody cares about them. MasterCard, agree with the call usual activity. Same with a lot, just a lot has a small gain. MasterCard crushing it, so we agree with that activity. We appreciate your time. Everything that we cover from Prep to Grow is based on our AI and big data platform. We are not financial analysts or advisors, but our algorithms are highly successful in predicting company performance, which leads to stock and option performance. Again, if you're interested in becoming a part owner or investor in Prep to Grow, we'd love for you to participate in this, and you can find us at wefunder.com/Prep to Grow. But have a great week of trading, and hope things work out in terms of the trading wise. Take care. Bye-bye.